All right. Hey, welcome to the September WASDE 360. We are so glad to have you with us today. We are already starting with some great conversation. And we've got Brooks York, who is the Director of Producer Services, and Sterling Smith, who is our Director of Ag Research. Right now, what you see on the screen is a spreadsheet from Sterling, and he is just going to roll with this today. So lots of good things going. Sterling, the floor is yours.
I made the mistake of asking Sterling his thoughts on supply and demand before we hit the record button. So for you guys that were on here, you get to hear this all again. But I got this hint. I've had this feeling that Sterling's been a little bit bullish all week. In just the conversation I've had with him, he kind of mentioned oversold a couple of times. So Sterling, not to ruin a streak, but I think these last two WASDEs you've nailed on the head. So we're not going to let you wait until 11:01 to tell us what your thoughts are. Go ahead. Are you a raving bull? Are you a slight bull? Or are you just complete bear?
Well, I'm not a complete bear here because the market conditions are oversold. We have enough bad news. The first big thing, and again, this is news from China, and we have to be careful about this, but China has cut their feed demand numbers by about 3 million tons for the forthcoming year due to low hog prices. Now, this is news from China, and you have to be very careful about how you read into this and what you take from this. They may be just kind of positioning themselves to hopefully drive the market down a little bit so they can buy more corn, or this may be a little more in line with reality. Prices usually aren't that big of an issue in China because the government will just bowl right over whatever they want to do. But moving on to today's information, right now I have ending stocks pegged. I think the USDA is going to put them at 1.251, which is kind of a bullish sort of look on things. If we look at what the street estimate is right now for corn ending stocks, right now we have the street is guessing them to be 13.41, and this is a function of yield. The street is guessing that yields are going to be higher for corn, 175.6. I don't think the USDA is going to be prepared to raise that number that much. And as you can see in here, the survey numbers, we had a low survey at 173. We had a high survey at 177.5. Last month, the USDA was at 174.6. Where I figured yields to be, or where at least I think the USDA is going to put yields, I have corn yields right now. I'm guessing them to be about 174.9. I don't think they're going to be that aggressive. Now, at the end of the year, notice I have this number noticeably higher. And that's because I've taken down the acres harvested by 500,000 acres. We're getting reports that there's going to be more acres that aren't harvested, so that's going to drive the balance sheet a little bit differently. And for corn here, I've pushed ending stocks, the amount we have left over after we do all our business, up a little bit to 1.421, which is a little bit higher than where the street is right now. And the reason this number went up mostly is because I took some off of exports. I don't know. Exports are up 55% this year over year. We're just starting the new crop year. I don't know if we're going to be able to move as much corn this year as we did last year.
Sterling, I'm going to jump in real quick here. So virtual crop tour, if you guys follow it, it comes out every other Friday right now as we started harvest. That 176.6, I'm going to tell you that the folks in the southern part of the Corn Belt are nodding their head right now at that 176.6. So just to refresh, that's kind of where Sterling thinks this thing could land in time. In the southern Corn Belt, there's a handful of farmers that participate in this VCT that are experiencing some record corn yields. Early beans, which we're not talking about yet, are maybe a smidgen disappointing, but they were kind of short. These early varieties were a little bit shorter, but interesting to note what you're saying there on the corn. It's kind of backed up with the early part of harvest we're seeing. And like you mentioned, as we head north, we know we're going to have some lower numbers when we get into the Dakotas and Minnesota, but off to a pretty good start so far. I do have a comment on your export number. I think that's where you landed. You mentioned you got to be careful of news out of China. So naturally this week, a lot of the calls that I've been getting have been surrounding basis levels, because in a lot of parts of the country, they've fallen tremendously because of Hurricane Ida. If you were on the webinar Wednesday call, we kind of went in depth as to what's going on in the Gulf, how many barges were sitting there, unloaded, how many of them were sunk, that sort of thing. The export trade, the one positive thing that I'm hearing out of the Gulf in the nearby Sterling is that the demand in regards to SIF numbers are still really strong despite freight impacting farmer bases. So it looks like it's a freight issue. These traders, despite what they're hearing out of China, still seem pretty optimistic. Is that something that you've seen in your career, where you get a saber rattling over here from China, but behind the scenes things aren't matching up with what's being said?
Well, I think if we look, and especially the export numbers today for corn, were really good. We moved a lot of corn, even with the hurricane, over the last week. Export numbers are going to stay fairly stout coming out of the U.S., going to China until we have a better idea about the South American crop. As soon as we get past about the October WASDE, that Brazilian crop is going to be in the driver's seat, because they're looking at producing maybe as much as 29 million tons more corn than they produced last year. Coincidentally, we sent China how many metric tons of corn? Oh, north of 25 million.
Yeah.
So there's the real fly in the ointment. China can say whatever China wants. They grow that stuff down in Brazil. That is going to have a material effect on U.S. prices. It hasn't become as complete just yet, but that South American weather picture is going to be moving into a much more important phase in about 30 to 60 days.
So looking at these ending stocks, I mean, they are, you've got them going up substantially. And that 141, just to clarify for our audience, that 1.25 to 1.421, that's a look at what time period? You believe
Okay.
that 1.41 is for next year, correct?
No, I believe that is what the January report will yield. I have not yet started doing things for the 21-22 crop. And again, this number right here, the export number, is going to be a big driver of that. And yields are going to be a little bit of a function of this. If we take this yield down from 176.6 to 175.6, which is entirely conceivable, notice how that balance sheet changes. That shaves quite a little bit off. If we take this number down just a little bit, it can tighten back up. And that normally is bullish. But again, that export number could be quite variable, where it could be noticeably smaller, meaning we could add 200 million right back very easily.
A lot of farmers right now, I think, are pretty elated with the yields, and that's kind of taken their focus off what the board's done in the last 2 weeks. And you're getting a few that are paying attention to basis, and some have kind of hit a little panic mode in here. And fortunately, freight's backed off a little bit. SIF has firmed up a smidgen, or become defined, I guess I should say, over the last week, where we've actually got some trade, because we know how we can function and unload, getting a better idea on that every day. These numbers, while they're not wildly bullish numbers, they're really not wildly bearish numbers. The good news here is it should give us an atmosphere and environment where we have multiple chances to market grain. It may not all be the roses that we saw over the last 90 days, where every day was a good day to sell, but this certainly keeps enough of an edge for the bulls to occasionally have that that rally day when news comes out. And we're getting ready to enter in a pretty important season right now in South America. And we're going to talk about this on the third Thursday marketing meeting. I've asked Mike Toohill next week to step in. We're also going to have Charlie Laird from CGB Enterprises to talk about the Gulf situation. But Sterling, we're getting ready to switch gears in a big way. These yield numbers, while they can change, and in a matter of a couple weeks, they're old news, and then all of a sudden our headlines are dominated by South America. What are we looking at down there right now? Have you heard any news out of South America?
Right now, the weather's been hot and dry. We've seen a continuation of the weather pattern that we saw last year. Now, if we see a La Nina set up, and depending on the strength of that, that could be bad news for South American production. That potential is there. But again, now we're looking at weather 60, 90, 120, 150 days away. And as we all know, trying to predict the weather outside of 10 days, things start to get a little loose and a little wavering. And that's going to be the big story. The other thing that we can look at here, as harvest moves north, we're going to start seeing more and more problems crop up. I mean, right here in eastern Nebraska, the stuff is fabulous. Now you go 60 miles north of me, you start seeing it go downhill. There's areas in Iowa that are going to have questions, and there's going to be issues there. So that's something that could potentially spark rallies that are short-lived and fierce, meaning we have a fund accumulation of a short position, or they have a lot of shorts on even though they're net long. Those positions get bought back and prices can spike. That is a potential situation where we see what is known as a bear market rally, where you have prices generally getting saggier and saggier and weaker over time, but you have fierce moments where prices bounce. And that is kind of where we could end up, in part depending on how this report comes out.
So Sterling, we just got a couple of minutes. Give us the three most important things to keep our eyes on today.
Okay. The biggest things we want to see are going to be the corn ending stocks and core yield number, how much they move that. That's going to be
that's
a
one.
look at. And the same package here with the soybeans. So here we got soybean yields and our soybean ending stocks number, where the street thinks these are going up. If we hit 155, and I think these could actually be a little bit lower than 155, that's something that could help propel the soybeans, which if you can get one of these things going, you may have enough strength to drag the other one. The other one is the cotton number. The ending stocks number on cotton. Cotton had spectacular export sales today. Cotton conditions were the best ever, but they dropped 10 points after this hurricane. I don't know if the USDA is going to be addressing the hurricane in this report. They could, they might not. But this market is going to be particularly sensitive. Last month we were at 3.0. The survey is looking for 3.4. I was sitting at 3.2 based on a little better exports and a little better yield. But now all of a sudden that number may change, and the cotton market is such where we could really see a favorable reaction to a bullish number.
We're just, by my calendar, by my clock, we're just a few seconds away.
We are 15 seconds away. And hopefully the technology gods deliver this without a problem. There was an issue getting out the export sales numbers this morning because it is crop rollover year and numbers are a little bit messy, but this comes from a whole different bucket, so it shouldn't be too big of a problem. And there we are. Corn, 176.3. The street got it right. Soybean yields 50.6. That is higher than expected. Ending stocks for corn, 1408. So that number is probably going to be seen as bearish. Cotton ending stocks at 370, so they did not address any sort of cotton yield issues at all with that number. And the soybean ending stocks 185. So pretty much in line with expectations, and that did bump things up. So we're going to have a little heavier balance sheet in the soybeans coming into the fall, and we usually see better soybean yields than expected.
So Sterling, I'm pulling up some quotes right now. Are you seeing any initial reaction on your screen?
I am not real-time enabled, so.
Okay, I will pull mine up here and we'll see what the reaction is. You have to think that the market's got to look at 185 on beans. That's the highest number we've printed in months on bean carryout. Corn, I know not the highest number we've had in months, but definitely a little higher than I think anybody thought today might end up with. Let's take a look.
And then here, I'm jumping to, I've actually got the actual report in front of me, and I'm jumping to the corn numbers right here. And the corn area harvested, they came out at 85.1, which is actually higher than where we were last month at 84.5. So they added 600,000 acres to the harvest while bumping yields from 174.6 to 176.3. On the upside, they increased exports to 2.475. There we go. And the ethanol number, let's see if they did anything. Ethanol stayed pretty much the same.
So the market really yawned at this. I'm gonna share a screen here, Sterling. I hate to interrupt you. I'm going to share my screen with quotes. Really kind of a surprise trade, although I think you kind of had this in the back of your mind. Soybeans are actually stronger right now. Let me share a screen here and look at some live quotes. I'll walk everybody through them. Pretty interesting to me. Corn is in the red, but soybeans trading a little higher. So you can see corn here. The deferreds are still green. Next year's corn up a couple. A little sell-off here. Don't pay any attention to this first row. September, look at December. We're down 5. But beans, surprisingly, with that carryout number a little bit stronger, up 4 to 5 across the board. Wheat, a yawner. We're mixed at Chicago, trading about even in Kansas City. Minneapolis down about 8. So I don't know. I guess I would look at this reaction to those numbers as somewhat positive for the next few weeks. You got any take on it?
I think the market conditions can see some positive things out of this, particularly here when I look at soybeans. The area harvested, they took it down to 86.4, but they raised the yield a little bit, so there may be a little bit of room for maneuvering there. They did increase soybean exports by 45, which is a good thing, but they cut the U.S. domestic crush by the same amount, so it doesn't really matter that much. So the market is oversold. If we could have some global macro forces maybe push things higher, a weaker dollar index being the number one thing, that could work to help push prices up here.
Well, an interesting trade. It will be interesting to see how the rest of the day goes. Initially, not the reaction I was expecting with those type of numbers, but I think we had this sell-off on corn now for really about 10 trading days. We've had very few glimmers of hope, and it just continued to trail off. So maybe we got a lot of this out of the way prior to the report, being still trading up about 3.
And where's corn at right now? I see a headline here saying the corn just traded below $5.
December corn is at 5.05. There was a second ago. There was a blip. We hit 497.5 as a low. We popped off that really strong. We're at 5.04 and 5.05.5. Right.
That most likely was funds coming in and covering fresh shorts that they put on. This afternoon's Friday Afternoon Marketing Club, we're going to have a much clearer picture of where the fund position is migrated to in terms of corn and soybeans, which most of this selling has been regular incremental fund selling. This has not been a lot of farmer selling or commercial selling driving the market lower. So on the upside, on the downside, it drives prices lower. On the upside, if we can get some bullish news, there's fuel to come back in here and buy this stuff and push it higher.
In talking to a lot of farmers right now, especially with the Gulf situation, harvest has really not started across the country in general. I mean, maybe there's a lot of guys maybe some guys in central Illinois and central Iowa that are sticking their nose in the fields, but for the most part, it hasn't. In the South, what the dilemma was is literally they saw that corn basis on the river, and if you were at the webinar Wednesday meeting, it's a domino effect, right? Even if you're not delivering on the river, the competition's less at the ethanol plant, the competition's less at your rail facility. You get this big shift of basis lower. What a farmer did is early in harvest, generally some bin space. Corn might be a little bit wet in the field. We're going to let it set just a little bit. We had that knee-jerk reaction. We didn't know exactly what was going on in the Gulf. So Sterling, I think you're right. I think even the corn that's being harvested is not being taken to market. Farmers aren't selling this early. Now, they may be forced to go to the market in 2 to 3 weeks when they run out of physical space, when they know that they've got to get in the field and get the job done. But for right now, I think farmer selling's been very, very light.
Right, and seeing that basis drop like that, when they get the Gulf back up and functioning, there's no rule that says that basis can't rebound a little bit. A couple other things noticeable on the WASDE here. They increased last year's carry-in by 15 in beans and by 70 in corn. That accounts for a third of this increase in ending stocks for the new year. So that means most likely some stuff didn't get exported, or there's delays, or it's in the rail pipe. Who knows where it is? But most likely that's exports that could get added back in, over the next couple of months as exports normalize.
Yeah, we're in that funny type of the year where you've got a mix of old bushels that are primarily in the pipeline, and you've got some new ones in there. Very difficult. We're going to have a stocks report coming out here in a few weeks, and a stocks report in September is a wild guess at best, in my opinion, because you don't know what's old, you don't know what's new, you don't know what's in transit. I think with the situation in the Gulf, it even makes that more extreme.
Yeah, that's definitely muddied the picture. And with exports being the big variable, particularly for corn this year, driving prices, losing any clarity on that. And corn export inspections for the week were awful. So we can expect some terrible exports for the next week or two at least. That definitely muddies the picture, and it's hard to get clarity. And that may be causing some of the fund liquidation as well, as when they lose clarity, they tend to take their little ball and go home.
Yeah, for sure. The good news out of the Gulf, I give everybody just a little bit of insight. And like I said, if you can tune into that third Thursday marketing meeting, we're going to know a lot more by next Thursday each day we do, and just kind of give you an idea on how this works. The Reserve Louisiana locations, ADM, Cargill are down there, and they got hit pretty hard, both of those facilities. Initial reports the day after the hurricane, oh my goodness, we're down for a year. 2 days later, we're down for maybe 10 months. 5 days later, we think we might be able to get back up and running in 6 months. And I'm not going to say that's necessarily going to be the case, but things are seeming to get a little bit more optimistic. There was 2 terminals that were back online earlier in the week. Today, there's 3 to 4 that are scheduled to be back up in some capacity. So it looks like those barges are going to get unloaded. Around 70 to 75 barges were sunk. A lot of lids or fiberglass coverings on hopper barges were lost in the wind. So we're going to get those things, get everything cleaned up and get those barges back in fleet. Just some interesting facts from the week on the barge market. There's about 13,500 covered hoppers out there that handle our grain, and they need to make about 7 rounds during the course of the year. And in the last week, August was really the last week we had a good report on the number of barges unloaded. We had around 500 barges unloaded down there in that week, and it picks up every week. So we may have 2.5, 3 million bushels that are backlogged, waiting to be unloaded, and most of the facilities were at capacity as it was. So that is going to create, it's not like we can shift in another overtime and get 30 hours out of a day. You can't do it. So we are going to be a little bit behind throughout harvest. We'll have to play catch up into the future, but good news is it does look like some of those barges are getting unloaded and getting back into circulation.
And that will relieve a lot of tension in the market and a little better fund participation here. And combined with some bad news about weather in Brazil, that's probably going to be the thing that will be the most beneficial, is if we see weather problems there. That's because looking at where they put global corn ending stocks, they raised it from 285 to 298, and that's courtesy of our friends in Brazil entirely.
Very good. I'll give everybody one last update. Things have changed tremendously on the market since we last looked in. I'm going to go ahead and share the screen for some optimism. I hate to tell you this, Christy, but it looks like that little bullishness I felt in sterling through the week is actually coming to fruition in this report. We're seeing corn trade 3 cents higher now. We're seeing beans in the teens higher, 12 to 13 higher here in November beans. So given all of this news, I think the market's reaction has got to be looked at as something positive for the next few days, maybe the next couple of weeks.
Yeah, I would agree. At least it's not a negative. That was the other concern I had, was all these numbers come out and the funds get a little edgy and they get a little nervous and they dump things here. But it looks like right now some routine short covering, and maybe we're getting some new people coming in and buying on the long side. So
very good. I think with that, Christy, that's a wrap. With these WASDE reports over the last couple of months, they definitely have been big events. I know today maybe the market didn't show us fireworks, but I think the numbers kind of did. I think they surprised some folks, and they've been worth watching here over the last couple of months. So a good one to tune into again.
Okay, I'm back.
Sterling, I was just kind of wrapping up things for Christy and kind of giving a synopsis of things. Any final words on your end?
No, I think we've about covered it.
Very good, Christy.
Pretty
Take us
exciting
away.
meeting. Oh, sorry. Yes, it's been very exciting. You guys always amaze me with how you're right on top of everything. I just wanted to give a quick reminder that we do have that third Thursday coming up next Thursday. So, and we have Charlie Laird, who will be a guest presenter with us. So please make sure you get registered for that. You should start seeing things on social media. Hopefully you'll get an email from your agent as well so that you can sign up for that. Also want to remind you that we have our virtual crop tour going on, if it will show up. There we go. We have a virtual crop tour, so make sure you're tuning in for that. We have a survey that we put out every week for each edition, and we would love for you guys to participate in that and share that with your friends and family. We really would love to have some good participation. So if you would like to get a link to that, please just shoot us an email to that marketinginfo@sampointernational.com, and we'll be happy to get that to you. We really thank you again today so much for being a part of our WASDE report and all of the things that Brooks and Sterling have to say. It looks like Brooks had to tune out, but Sterling, thanks for hanging in there with us. And if you have any questions, please feel free to reach us at that marketinginfo@sampointernational.com. Thanks again and have a great afternoon.